From tariffs to tech stocks, war headlines to wage reports, there's no shortage of noise in today's economy. But underneath the headlines, the fundamentals are still sending a strong signal. New GDP revisions and jobless claims are out. And while growth took a small step back last quarter, the labor market is holding steady, consumer sentiment is bouncing, and inflation is moving in the right direction. Here to help us figure out what really matters for your money is Ted Thatcher, president of Bright Lake Wealth Management. Ted, welcome back. Good to have you. So a negative revision to Q1 GDP doesn't sound great on the surface, but with jobless claims this low and inflation at 2.4%, is this really a slowdown?
Alicia, it's good to be with you. I don't see it as a slowdown. No, these are just backwards, viewing updates, revisions for Q1, which seems almost outdated given the fact that we are, of course, near the end of Q2 here. But when we see a GDP print come in above expectations, that's positive news. Unemployment came in below expectations. Initial claims were 236,000. That on top of a string of other positive economic news. A couple of weeks ago, the May print for the CPI came in at 2.4%. It might not be Jerome Powell's desired 2% target yet, but it's trended down. Consumer sentiment, while it had slumped for months, had a large rebound and is expected to continue to rise this Friday.
Well, consumer confidence trending down. We saw what happened in June, but sentiment is bouncing back. That's an unusual split, isn't it? What does that tell you about how Americans feel versus how they're actually spending and investing?
It's a good question. Of course, when you hear consumer sentiment and then you hear consumer confidence, you'd almost think they're the exact same. Consumer sentiment is really how Americans feel about their personal finances. It kind of attributes more to the way their spending habits are. And so you could naturally translate, how strong is, the consumer and their spending habits there. Consumer confidence really trends more toward how they feel about the economy at large. And so, yes, that has trended down, but I think that really to me, I would attribute to a lot of the uncertainty. It tends to be more of a lagging indicator. Of course, there was a lot of uncertainty. Consumers, Americans around the world, we were looking for clarity about what to expect with tariffs. Obviously, a lot of the volatility around that has calmed down. There was a whole lot of uncertainty the last couple of weeks with everything going on in the Middle East. Today, we see a ceasefire, despite all the news headlines that we were about to walk into World War III.
Right. I want to talk about investing. In your notes, you're sounding a little bullish on NVIDIA and Google, but cautious on Apple. So for people who've gone all in on big tech, is it time to start being more selective?
I think we want to always group this Mag 7 mega cap group at the top of the S&P 500 together. And I think it's actually important to look at it with a little bit more nuance. NVIDIA, of course, is the name we've all heard 1,000 times. And often, we've looked at that and said, okay, is it too far gone? Is it too high? Is it too late to buy in? I think at the end of the day, I'm actually bullish on, of course, AI as a technology and at least in the medium term, NVIDIA as a company. I mean, they just beat on their Q1 revenue expectations. All their earnings were beats, despite all the concern about whether, the regulatory environment would allow them to, sell into China. In addition to that, they just had a record day yesterday. And a lot of institutions are actually moving their price targets higher, as high as $250 a share, I actually saw. And so that's driven, of course, by big tech. These mega cap companies building out their AI infrastructures, and it's hard to do that without a large investment into those H100 hardware pieces of NVIDIA's that we talk so much about.
All right, great insight as always, Ted Thatcher, president of Bright Lake Wealth Management. Appreciate your time today.